In this short video, we will provide you with a brief overview of the Statement of Financial Position. The Statement of Financial Position provides information about the economic resources available to the entity to generate future benefits. The financial well-being of an entity is reflected on this statement. The information needed to determine the liquidity position of an entity, or in other words, the ability of the entity to pay its short-term debts, as well as the solvency position, which indicates the ability of an entity to meet its long-term debts, is provided in the Statement of Financial Position. The Statement of Financial Position reports on the monetary values of all the assets, liabilities and equity of an entity at a particular date. This date is usually the last day of an entity's financial year. The first element reported in the Statement of Financial Position is assets. Assets are defined as a present economic resource controlled by the entity as a result of past events. An economic resource is a right that has the potential to produce economic benefits. The second element reported on is equity. Equity is defined as the residual interest in the assets of the entity after deducting all its liabilities. Equity represents the interest of the owners in the net assets of an entity, which means the part of the assets against which there is no claim from other parties. The third element reported on is liabilities. A liability is defined as a present obligation of the entity to transfer an economic resource as a result of past events. The Statement of Financial Position should always balance. This is similar to the accounting equation. Assets should always equal equity plus liabilities. If you now look at the top part of the Statement of Financial Position, you will see that it is the total of all the assets of the entity. The bottom part is equity plus all the liabilities. The Statement of Financial Position thus reflects the accounting equation.